Hi there, you're watching Dukascopy TV. I'm Ben Jones. The Reserve Bank of New Zealand have once again kept their rates at 2.5%. Many were predicting a change because of the country's increasingly strong economy. Joining me on the line to analyse this decision is Christoph Thoenissen, a lecturer in economics from the University of Sheffield. So, Christoph, New Zealand's economy is still surging forward. Employment and the housing market are just some of the factors contributing to this. But the central bank have stuck with 2.5%. Why do you think this is?
Okay, several reasons. I think the main reason is an institutional one. This is not a forecast month. There's a month they have something called a monetary policy statement, which comes out quarterly. That's due to come out in March. Then there's a select committee hearing, also scheduled for March, and if they time the increase in interest rates, because rates haven't gone up for a long time, if they time them for March, that gives the governor a better opportunity to communicate the reasons behind the rise. I do think it's going to happen in March, and that's the beginning. So I think rates will probably peak at, about 3.5 or 4%. There'll also be a new forecast in March, so I think it's mainly to do with technical reasons.
What else do you think has been key for the economic strength of New Zealand at the moment? Could it be exports?
Oh, extremely key. The dairy exports, it makes up most of it's the majority of exports from New Zealand. So this is very important. They've had high prices, but a strong dollar, which I suppose kind of kept the lid on inflation, of a sense, because otherwise you get very strong farm incomes, and if those strong farm incomes then translate into lots and lots of New Zealand dollars, which because of the strong dollar they didn't as much, that would have fueled inflation even further. But the dairy sector is vital.
Now, many are expecting New Zealand to be the first developed economy to raise its interest rates since the financial crisis. But what are the potential risks if they leave it too late? And where do you think could be next to hike its rates?
Leaving it too long, well, I think the risks there are primarily on inflation in the non-traded goods sector. You have to bear in mind that currently the headline inflation rate is 1.6%, and the PTA gives a sort of the target agreement. They should aim for 2, so they're actually below target or well within range. So there isn't a pressing need, but that does come about to the strong New Zealand dollar. And I do fear if they leave it too long, and especially with tapering on the Fed, if the New Zealand dollar starts to rise, and you could get quite sharp inflation in the tradable sector. Also, you get overheating and continued overheating in the property market, particularly in Auckland and Christchurch. I don't know really who's next. I can tell you it's probably not next. I mean, the Australians haven't really had a financial crisis, so their monetary policy's more been sort of business as usual. They've had their rates gone up, down, and they recently went up to 2.75 and then down again to 2.5. So I don't think they will do much. The Bank of England, probably not this year. There might be a strong property market down south in London, but the rest of the economy is still quite weak. I see no chance for the ECB in the coming year. And even the Federal Reserve, they still have loads and loads of tapering to go before they even start rising.
Christoph, thank you very much for talking to us today. That's all we've got time for. I'll be back tomorrow bringing you the final edition of Forecasts for the week. But for now, goodbye.